All right. What is up, traders? What's up, tycoons? Super excited for today's video. Lots of headlines to cover in natural gas. We're going to go over some of the biggest headlines recently surrounding natural gas. Obviously, the war in Israel has a big factor to do with this, but there's also some news in Finland. We'll go over that. We're also going to take a look at the weekly chart for natural gas. We are getting the bullish count, which I've been telling you guys this is the one that I favor. All right. We're going to break that down in detail in today's video. We're also going to zoom out and take a look at the overall monthly chart. We're going to go over the major supply and demand zones and why we're in no man's land right now. All right. We're going to explain what no man's land is to you and why you don't want to be entering trades in no man's land. Also, we're going to break down and zoom in the 4-hour chart for that, using those same supply and demand zones, and also going to throw in some Elliott wave theory in there. Okay, and then we'll take a look at UNG. All right, break down UNG in the daily chart. We got the gap fill up here right around 780 on UNG. Very nice to see. And last but not least, we save the best for last. We're going to break down Boyle, and Boyle got both of its gap fills to the upside. Look at this huge gap up here. We're going to break down the possibility for Boyle and where it could potentially go and how it's possible it could head back up to the 130 to 140s. All right. So we'll break down all of that in today's video. But of course, as always, the content on this channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. So please be sure to read through the disclaimer, and we'll go ahead and hop right into it. So an Israel gas field halt threatens Egypt's LNG exports to Europe. All right, their gas shipments to Egypt fell by 20% as safety concerns prompted the shutdown of a key offshore field, threatening onward deliveries to Europe. Halting the Tamar field in the Mediterranean Sea reduced Egypt's imports of Israeli gas to about 650 million cubic feet per day. The North African nation is weighing the impact on its plans for liquefied natural gas exports after a cargo was shipped to Europe on Friday. Now, this is important to the U.S. We're also seeing, European natural gas shoot up, but the U.S. is a global powerhouse when it comes to exporting LNG and global LNG supplies. So, that's definitely impacting the U.S. Israel orders Chevron to shut down their gas platform near Gaza. The shutdown of the offshore Tamar platform in the Mediterranean Sea shows the risk for Chevron as it operates in the region. And natural gas futures rally indoors amid the LNG strike fears, war in Middle East, and solid spot prices. They rallied for a fifth straight session on Monday, powered by a tightening domestic market and global supply worries spawned by the threats of an LNG worker strike and the sudden eruption of a war in the Middle East, a key energy producing region. All right, and some more on that. Oil and natural gas prices climb after the Israel-Hamas war erupts. All right, Brent crude futures, the global benchmark, that rose 4% towards $88 a barrel. The U.S. marker West Texas Intermediate also rose 4%, and European natural gas futures leaped 14% to more than 43 euros a megawatt per hour. So we're seeing a huge increase in energy prices just across the globe and across the board, both in oil and in natural gas. Finland says outside activity was likely what damaged the gas pipeline, the telecoms table. A subsea gas line and telecommunications cable connecting Finland and Estonia under the Baltic Sea have been damaged in what may have been a deliberate act, the Finnish government said on Tuesday. So we're just seeing lots of crazy stuff happen right now across the globe, not just the Middle East. Let's go ahead and get into these charts, okay? Because unfortunately, as it is, oftentimes war can be a very positive catalyst for energy prices. We saw how things played out for natural gas and the, incredible rally that it had during the whole Russia-Ukraine situation. All right. And we talked about two counts here. Okay. And we went over the bearish count, which is going to be a 1, 2, 3. And then we had an A, B, C, D, E here. And that was going to be wave 4, bringing us down to wave 5. Okay. And that was going to bring natural gas down to about $1.08. And I told you guys that I really didn't favor that. Right. And there were a few reasons. If we come down here and take a look at our RSI, all right. Oftentimes you can find chart patterns on RSI and, some of your indicators. We have a very simple one here known as an inverse bump and run. It's been my favorite pattern of the year 2023. So what we have is a prevailing downtrend right here. And then we have a smaller downtrend right here. Okay. And this is what is known as your bump. It's more aggressive. Okay. So we have the bump. And when you break through the trend line, this is your run. And so you see we got the first break here, and then we broke through the second one. This is very bullish, okay? And this is what I've been mentioning to monitor, and what we're needing to see, basically further bullishness, continued bullishness, is we got the first breakout and we really wanted to break out past the second trend line, and natural gas finally broke above that $3 threshold, and we're targeting this area here that I've mentioned before. I really think that it's possible we come back to at least $3.50 to $4. Why? Because old supply becomes new demand becomes, or old supply becomes, or old demand becomes new supply, right? Just simple support and resistance stuff. You can see we've tested it in the past here, and we have not tested it as resistance, right? We haven't tested it as resistance yet in the future. And so to me, this is an area where price action is naturally going to be drawn towards. Okay. And that's more of the bullish count. So the bullish count was simply an A, B, C correction. And we had this triangle pattern here, this ascending triangle, which is a bullish triangle pattern. And, we're looking for the breakout now, which is exactly what we're getting, heading up towards that 350 price level. Okay, not only that, on the RSI that we talked about, we also got a bullish crossover here on the MACD. If you take a look, that was pretty much the bottom for natural gas. As soon as we've gotten that bullish crossover, it's done a steady job of continuing to make higher lows and higher lows and higher lows, as indicated by this trend line right here. Okay, so, there's been lots of signs. It's been very painful for people trying to play things like Boyle and even UNG. And I have some really good videos explaining, the decay factors surrounding things like Boyle and UNG. It is possible to make money holding those for extended period of times, but you need the right conditions, okay? Otherwise, you're going to get a lot of decay. There's different forms of decay, such as contango, things like that you should be aware about. So definitely look up that video. You can just type in ZachlyTrades, Boyle, UNG, decay, and it explains it all in great detail. Now, if you're new to the channel, I do want to mention I have a completely free newsletter that I started for y'all called Investment Intelligence, giving out free valuable finance content, right? Going over, commodities markets, going over bond markets, stocks, even crypto, and really good stuff in there. I also like to sprinkle in some free trade ideas. This was one on Tesla over a month ago, highlighting some of the conditions that we saw on the chart. And if you take a look, that trade played out very, very well. Okay. This is one on ExxonMobil. I've been bullish on energy for a pretty long time. And we were going over the conditions we were looking for in the RSI and the MACD. We got the RSI breakout and the MACD crossover. That was a nice trade there as well. And then we also have SWK here, which is Stanley Black & Decker. Not all trades are long ideas. Some of them are even short ideas. Where there's a rising wedge here, we're highlighting where we thought the price would go down to. And you can see that that played out very well following the analysis. So if you're fans of free valuable content and you want free trade ideas sent straight to your inbox, sign up for that newsletter. It's completely free to you guys and help support the channel and help me grow my brand. Now, let's go to the monthly chart here. We're going to talk about no man's land. Okay, so what is no man's land? No man's land is these areas in between your major supply and demand zones. And the reason it's called no man's land is because you don't have certainty where price is going to go. You don't know if it's going to go to the upside or to the downside when you try to enter in no man's land, and your odds of success are much more limited, okay, especially from a risk to reward ratio. Now, we've talked about how there's been years and years of strong demand back in the zone, and how each time we've tested this level, we've always pushed higher. And you can see here, as soon as we came down into it, we didn't even come anywhere close to closing on a monthly candle in that demand zone, because as soon as we got near it, buyers and demand stepped in and continued to push price higher. And I mentioned how, if you look, since 2023 started, we consolidated in that area and in that overhead supply zone for almost an entire year. Now, one of the big things with these supply and demand zones is the question you have to ask yourself is, are these orders being replaced? So we had almost an entire year of supply imbalance. That's what a supply zone is. It's an imbalance of sell orders and imbalance of supply. So for 1 month, supply imbalance, right? Were those orders replaced the next month? Well, maybe they were, right? And then we come again, and those orders continue to get eaten up and eaten up. And that's what you want to see, right? In overhead supply zone is you want to see those supply orders, those sell orders get filled. And then you want to ask yourself the question, do you think they're being replaced? And eventually, after they fill enough of those sell orders and there hasn't been enough replaced, what you're going to do is you're going to create an imbalance to the upside, right? And you're going to create a demand imbalance, because now all of the sell orders have been filled and now there's actually more buy orders in here. And so now we're looking, and this is potentially turning into a demand zone. Now, It's still early in the month for October, so things can change. But currently, at the moment, we're looking to see if this is going to hold up as a demand zone and push price up higher. Okay, if we zoom into a 4-hour chart here, all right, and we break things down again, essentially what we're looking at here is going to be a 1, 2, 3, 4, 5. Okay, and being that this was a prior supply zone and we consolidated, we filled a lot of these sell orders here, and we created that demand imbalance that pushed us up higher. We're going to look for a break and retest of this supply of this former supply zone and see if we can truly turn it into demand. Okay, because if this is just an overhead move to the upside and we end up reversing and fall below the demand zone or below this overhead supply zone, then this was basically just a liquidity grab, right? And so they were stopping out a lot of shorts up in this area, squeezing price up higher. And ultimately, this is where big money institutions wanted to come in and short, and they have the possibility to drive price down lower. But to me, that's not really the case. We mentioned this bullish megaphone pattern that we had here, and we were looking, we had price touch up here, down here, up here, down here. We were mentioning how we wanted to see it come up here. And at this point is right around when I did my last video, and I mentioned there was a bearish divergence. So to put things simply, you can see how price was going up here, making higher highs, but on the RSI, we were starting to make those lower highs. And I mentioned, if you're bullish, you're just going to want to see a breakout, right? You're going to want to see a breakout of this bearish divergence, and take a look exactly where the breakout of the bearish divergence happened, right over here. And we saw an amazing push to the upside, showing lots of strength, breaking out above this bullish megaphone pattern. All right, and we hit the 1.618 extension for wave 3. And so it does make a lot of sense for us to potentially get a pullback here. Now, we don't have to pull back, okay? But being how frothy things are, right? We've been, basically overbought for an extended period of time here. It would make sense for us to get some type of a pullback, right? Again, we don't have to, but you want to plan and prepare, right? And what I mean by that is take a look at your RSI, and each time that we've been overbought, followed by a bearish MACD crossover, overbought here, followed by a bearish MACD crossover, we've seen a pretty significant pullback, right? We had it there, we had it there. And now what we're waiting for confirmation of a possible pullback is going to be this MACD crossover to the downside. It's on the verge of crossing over to the downside, and we are overbought. But again, just because something is overbought doesn't mean it has to go lower, right? And it was a great example of us looking for this bearish divergence to break through as a good entry point for us to, rise up higher. And we hit the 1.618 extension right there. That's pretty much where we're consolidating at. So, we can continue to push higher and try to go into the next overhead supply territory. But remember, from a risk to reward standpoint, okay, so it basically, if you're not in the natural gas trade right now, it's much more risky to try to get in at these, overbought conditions, right? You would be looking more for a wave 4 pullback. Okay, and keep in mind that the futures contract recently rolled over, so there is this gap down. It's very possible that this gap down fills. These gaps, they do tend to fill a majority of the time. The big question is when, right? So we can't necessarily put a time period on it, but we can chart ourselves and prepare for it. What's really great about this gap, even if this gap does fill, it takes us down here. The top of the gap is our 61.8% retracement level, and then the bottom of the gap is our 764 retracement level, which would be healthy wave 4 territory. Okay, so if we do end up getting a pullback and this wave 3 does not extend up higher and we are topping out for wave 3, we would look for a wave 4 pullback to potentially fill this gap or find support above there at the previous 1.0 extension. Okay, so these are the MCX futures right here. So the numbers are going to be a little bit different than the Henry Hub natural gas prices. But, basically we're looking at anywhere from 245, 239, 235, and 222. Those are going to be the main levels here on the natural gas MCX chart, okay, where we're going to be looking to potentially target some entries, right? Remember, we talked about this being no man's land right here, and your odds of success, your risk to reward ratio from entering halfway in between the overhead supply zone and the underhead and the below demand zone, is much more skewed. If you can catch an entry on a retest, maybe even of this trend line or, of your previous supply zone, and see if we can turn it into demand, that's going to be much more healthy, right? And that kind of coincides with that wave 4 pullback. So we break out, retest this overhead supply zone, turn it into demand and push up higher. All right, that's what we're going to look for, and that's basically going to be my next entry on natural gas. Is if we do get a pullback, I'm not going to chase things currently at the current price levels, but there's a lot of catalysts surrounding things right now, and there's two ways that can play out. Okay, so essentially, with the two ways, one of them is that this is going to continue to send prices higher. Okay, and the second is that this is going to be a massive overreaction to the upside. And number two would be that we basically had a false breakout and we start to come back down. Okay. Now this is something that's going to develop further. All right. And it's not going to we're not going to know the answer to those two questions by the end of this week. Right. This is something that's going to play out over the next coming months. And that's when we'll have a much clearer picture of whether or not, maybe the market's overreacted to this initial Israeli war conflict they have over there. And if that situation continues to get worse and things, worsen and with that situation, then it's very possible that we'll see that this is ultimately going to be a sustained bullish catalyst for the natural gas prices. Now, this is UNG right here. UNG came up nicely and filled its gap to the upside that we mentioned in the previous video when we were battling right around that 1715 resistance right around this area here. All right, and you can see we came up and went ahead and filled that gap that I was speaking of. Now, if UNG can hold 7.7, so you can see both of these, if we go back to the previous chart, they're both basically at their 1.618 extensions right here. So if we break below 7.77, we're going to look for some strong support at 731 on UNG. But if we hold above 777, 821 and 852 are going to be the next overhead price levels. And as I mentioned, if we do end up getting a little bit of a pullback, 731, you also have 715. And if for some reason we break below there, all right, our next major support level is going to be at 667. We'll go ahead and go into Boyle now, everybody's favorite, and talk about Boyle. So there's three stages to a reversal. All right, it's pretty simple, pretty cut and dry. You have a downtrend, all right, then you have box consolidation, and then you have an uptrend, right? And so take a look at your chart right here and let me know what you see. Right, I see a very clear downtrend, and then I have this big box consolidation here that I'm looking at. All right, between this overhead supply zone right here and this demand zone down below. This is our box consolidation. And if we can break out and flip this overhead supply zone here, basically at $80, if we can flip $80 from resistance to support, it's very possible that we come up and fill this gap here around 130 to 140. Now, that's not our main basically game plan right now. Okay, we're still in that box consolidation. We have not broken out. So if you're trying to buy a Boyle at these levels of 70 and hoping to get a 100% return right now, that's not realistic. Okay, what you're doing is you're getting ahead of yourself. So let's not get ahead of ourselves, and let's take a look here and see what it's doing. Right, we're zigzagging in between these areas, right, and where price action is consolidating and formed the box consolidation. We're currently battling 72.10 on Boyle. All right. Boyle also went ahead and filled its both of its gaps, got up that it had up to fill. So 72.14, that's going to be a big resistance level. Below there, we have 68, 64, 68, and 61.36. Those are going to be your support levels. If Boyle starts to pull back, if natural gas starts to pull back, we want to see if it can find support in these levels to potentially come up and retest that $80 overhead supply zone. Okay, now that's going to be a very key area. The one thing that I really like about the setup right now, okay, is we basically have 1, 2, 3, right? You could even call it 4 because this candle tested the top of that supply zone here as well. So, you could call this a triple top or you could call this a quad top. And remember, we talked about, are these sell orders being replaced? Okay. Are the same sellers that were selling throughout the entire year of 2023 at these levels, are they still going to be the same sellers that are going to step in right here? Or did those orders get filled, and are they potentially targeting higher levels to, put in new sell orders, right? Are they potentially going to target 100? Nice round number there. Maybe 110, 120, maybe even these 130 and 140. That's what we'll ultimately have to see. The more times you test the resistance level, the more times you test the supply zone, the weaker it's going to get. So, first challenge, get above 72.10. If we can flip 72.10 to support from resistance, then we've got that overhead supply zone. Ultimately, this is what it is that we're looking for right here. Okay, this is your, basically your best case scenario for right now. Is that we tested the bottom of our box consolidation. We want to see the breakout. We want to see us retest that $80 supply zone, turn it into demand, and we want to push up higher and fill the gap up here around 130 to 140. Okay, lots of things that need to happen for this to happen. I tried to highlight all of that in today's video, and hopefully you guys enjoyed today's video. Don't forget to smash the like button and subscribe if you did. That really helps the channel. All right, and you can share the video as well. That'll help the channel grow so others can find this content. Now, I do want to mention that I've been doing one-on-one coaching sessions for a while. I actually started a Ko-Fi page. There's a link in the description to go to my Ko-Fi page. And in here now is where I'm booking all of the 30-minute and 1 hour sessions. I've done lots of sessions with people trading natural gas and oil in particular. People trading small amounts, 4 or 5 figures, all the way up to 6, 7, even 8 figures. I've had, sessions with all types of different ranges. We talk about a lot of different things, and we can tailor it to, basically what it is exactly you're trying to find out about, what it is that you would like, basically my expertise on. Okay, and I can try to figure out what ways I can help you guys learn and what ways I can help you guys grow. And oftentimes, those end up turning into, a little bit of some relationships and some friendships. And I'm still in contact with a lot of the people from the coaching sessions, a good handful or two on a day-to-day basis. Now, if you enjoyed today's video and you want a video on your own topic of choice, you can also use Ko-Fi to request a specific YouTube video. So if there's a strategy, or maybe there's a concept I talked about in this video, or maybe there's a specific ticker or sector, anything like that you would like me to give some analysis on, you can come to Ko-Fi and you can actually put in that request. That's the best way to reach me and get me to basically see your message, and I'll make that video for you guys as soon as I can.